Hello guys, and I am back with another video on lemonade stock. Many of you may have watched the video that I posted 2 weeks ago about this stock, and if you haven't, I do recommend you go and watch it after these videos since I do a more in-depth analysis of their business. Lemonade reported earnings yesterday, so I will analyze their financials with you guys. I will also give you an overview of the company and my opinion on it. We'll also let you know what my strategy is with this stock. Please smash that like button and subscribe since it really helps my channel out. Also, about a month ago, I started a completely free Discord group chat, so if you would like to join, the link is down below in the description. So, Lemonade is currently trading at a price of $60.67 per share and has a market cap of $3.31 billion. Take into consideration that we do not have a lot of statistics of these stocks since they went public about a month ago. Lemonade is an exponential growth company since their growth in revenue year over year was impressive. This quarter, they reported a revenue of $29.9 million, which is an increase of 117% in comparison to the same quarter last year. Take into consideration that Lemonade is not a profitable company since they are a brand new growth company, and normally growth companies spend a lot of more money to get aggressive expansion and market share. Just because of that, I do not expect them to be profitable anytime soon. They reported a net loss of $21 million, which is impressive that it actually decreased while their revenue increased. Now, on their earnings call, they mentioned that the pandemic did not affect their business at all, which is very, very good news for the company. Something you always want to check when analyzing an insurance company is their loss ratio. A loss ratio is used in the insurance industry representing the ratio of losses to premiums earned. In other words, loss ratio lets you know how much money the insurance company is paying versus how much they are receiving. For example, if they charge $100 in premiums and pay $40 in claims, their loss ratio is 40%. As you can see, their loss ratio has been improving exponentially. It used to be at 368% in Q1 of 2017, and it got to 72% in Q1 of 2020. And this last quarter, they reported a loss ratio of 67%. But it is still a little bit high since the average loss ratio for any insurance company is between 40 to 60%. And the question is, why is this happening? How are they able to improve that and get a lower ratio with time? Basically, their artificial intelligence Maya is the one that deals with claims and new customers. When they started, Maya did not have enough data collected to make the correct decision about a claim, and that is why the company had a loss ratio of 368%. Maya was basically paying way more than what they were receiving in premiums by error. Obviously, with time and data collected, she has gotten more intelligent and been able to do a better analysis in claims and has been able to lower that percentage. On their balance sheet, we can see that their assets have decreased while liabilities have actually increased. They reported total assets of $399.9 million and total liabilities of $141.3 million, which, yes, their liabilities increased, but they still have a very nice total liability to asset ratio of 0.35, which for a growth company is impressive since it means that they only have 35% of their assets financed with debt. Something I like a lot about this insurance company is that one of the ways of disrupting the industry is by targeting millennial or younger customers. We all know that insurance companies have been around for more than 100 years and have not actually changed a lot since then. Lemonade has a plan that is to grow with their customers. What does this mean? They are basically targeting clients that have not had any insurance before and are looking for one at least for the apartment that they are currently renting or for their pet. Then provide them an excellent service and experience and price, so when the customer grows and buys a car, a new house, or anything, will continue with Lemonade as their insurance company. The idea of growing with their customer is actually what, in my opinion, will make this company grow exponentially. This quarter too, they reported 814.1 thousand customers, which has actually increased almost 84% in a year. I do think that it's impressive the growth that this company is having quarter over quarter, and obviously there is not a lot of information yet about the company since they just went public, but as far as I can get, I think that the potential that the company has is impressive, and if everything goes as planned, if they are able to expand to the states that they're not available yet and to other countries in Europe and start offering auto, health, or life insurance, they could easily 10x their value if everything goes as planned. Now, if you haven't signed for WeBull yet, make sure to do it and claim your 2 free stocks after depositing $100. One of those 2 free stocks could be worth up to $1,400. Link is down below in the description. Now, let's back to the video. Why do I like this stock that much? As Airbnb is disrupting the hotel industry, Uber and Lyft the taxi industry, and Tesla the automotive industry, I see Lemonade doing the same with the insurance industry. These types of growth companies are disrupting big and stable industries that have been around for years but haven't seen any kind of major updates since then. How is Lemonade different from other insurance companies? Easy, they do not make money by not paying your claims. As many of you may know, insurance companies make more money by not paying your claims than by the premium that you pay. Still, if they pay your claims, they will raise your monthly payment to overcome the risk, and it will cost you even more. While Lemonade just takes 25% as a flat fee of your monthly payment. Obviously, that business model of just having a flat fee may limit their potential revenue, but will help them have a stable and secure revenue as well. Also, customer acquisition will come very easily because their competition are companies that are very old and unloved, while Lemonade has a new product that attracts newer generations. When newer generations start getting Lemonade as their insurance company and have an excellent experience, they will start telling family and friends about it and will spread the word enough to bring more clients. That is why, in my opinion, I like that they have been training Maya, their artificial intelligence, for so long. More customers means more data collected, which means better machine learning that will be able to deal with claims and give excellent pricings to new customers. It is a simple cycle. A new customer comes, Maya collect all the possible data from them, give them an excellent experience and price to the customer, and then that customer tells a friend and bring a new customer to the company, and the cycle starts again. Lemonade is a growth company that plans to invest $1 in marketing and will get $2 in return. In my opinion, Lemonade is the biggest opportunity in innovation right now, and normally with big innovation companies comes great gains, and you know who I'm talking about. Obviously, as every growth company, the risk of investing in it is higher than investing in a more stable company. Right now, Lemonade is not a profitable company and has not given any outlook on when they see themselves being profitable. Also, as I said, collecting only a flat fee from your premium payment could easily limit their revenue growth, but also helps them to reduce the exposure to more risk. Also, guys, you have to remember that they just went public and that they have a lockup period. The lockup period basically is a period of 180 days in which executive officers, directors, and holders cannot sell any of their stocks until the lockup period expires. This means that they will not be able to sell anything until January 2021. Normally, I like to invest after the lockup period ends, since we tend to see a lot of volatility during that time and could easily bring the stock down. But obviously, in 6 months, a lot of things can happen. The stock could get to $100 and then drop to today's price after the lockup period's end, or it could easily not move at all and drop below today's price. So after explaining that, what is my strategy with Lemonade? To be honest, I'm not planning on opening a huge position in it before the lockup period, but I started already a small position. I bought one share at $68, then the second one for $66, and the third one for $58. As I said, this is a very, very small position for me since I want to track it. And will I buy more? Yes. For me, everything below $60 is perfect, and I will buy little by little every single week if it stays below 60. Again, I'm not trying to open a huge position below the lockup period expires in January 2021, since it is impossible to know what will happen in the short term from here to January. I'm saying that I'm all in this stock because I love the potential, the growth potential that this company is offering for the future, and I want to be part of this. Obviously, I'm not all in right now, but I will be adding stocks little by little to my portfolio, and at the end of the year or after January 21, I plan to have a big position. Obviously, not all my money invested in this stock, but I would like to have a big position in this company since the growth potential that they're offering as a company will definitely give me big returns as a stock. Right now, this stock is converting into my favorite one because the potential that it's offering is impressive. They are able to more than double their revenue year over year. They have a very stable balance sheet, and their business idea and service that they are offering will help them disrupt a huge and stable industry, and the truth is that I want to be part of it. As always, I'm not a financial advisor. Do your due diligence before investing in Lemonade. Hope you enjoyed the video. Do not forget to subscribe and smash the like button for the YouTube algorithm since it really helps my channel out. Also, do not forget about your 2 free stocks with WeBull, 1 free stock with Robinhood, and my free Discord group chat. The link is down below in the description. Thank you and see you next time.